this is Thomas from AIA Investment Management. In the next 20 minutes or so, I'll be sharing with you more about the two new elite strategies that will be added to your A-Life Wealth Premier product. Alright, first, let me bring you guys through a little about AIA. We are managing in excess of US dollar 251 billion worth of investment. We are the largest independent publicly listed pan-Asian life insurance company. And we have on board a team of more than 150 investment professionals, bringing with them more than a decade of experience. And AIA is operating across the 18 markets in Asia. And as you're all aware, of course, we are an insurance company. We are a long-term investor. We work with the best manager out there, both in-house as well as external best-in-class manager, to bring out the consistent, reliable, long-term return to our policyholders. Next, let me bring you through our investment propositions. It's largely the three key pillars of stewardship, long-term, and global expertise. So starting off with the first one, stewardship. Stewardship is really about working with the best manager out there, and that's where we, in this case, through the elite strategy, we work with the best-in-class institutional managers, which otherwise retail customers may not have access to. And in this partnership, that's where AIA apply the professional oversight and work with them closely to ensure that these managers are delivering what they're supposed to do. And as we are all aware, AIA has been around for the last 100 years. We have been through the different markets up and down. So indeed, AIA has the experience to manage portfolio as well as constructing the portfolio. So this, together with the expertise that the external managers bring along, allow us to deliver this stewardship of long-term value creation. Moving on to the next pillar, long-term, right? Like I always emphasize, right? It is always good to stay invested over the long term because it has been proven that long term will deliver the result by staying invested. And this is largely the AIA way, where we have the proven track record of staying invested. Last but not least, global expertise, right? Like I mentioned, we now, in this elite strategy, we partner with the best-in-class institutional manager, and coupled with the in-house portfolio construction and management capability, we offer clients that global reach, right? The global expertise in order to deliver that long-term results to them. Alright, after understanding the three key pillars, the investment proposition, let me show you how do we do it, right? So how do we deliver the result at the end of the day, right? It is a combination of many factors, and a lot of these are actually interrelated if you think about it, right? It is really about having that governance, that oversight, that control. That's where we monitor the performance of the manager, and along that journey, we produce the relevant reports. And of course, as always emphasized, the manager selection is very important. We ensure that we get on board the best manager that comes and put together with their own unique investment style and skill. That is where the elite portfolio has the core portfolio, which is the strategic asset allocation that will actually help to deliver the long-term result. And as we all know, market is never static, right? Market is always moving. It could be up, it could be down, there could be volatility. That is where the AIA investment management team will actually actively manage the portfolio on the back end. That's where the tactical asset allocation can kick in. That's where we can move the allocation between the underlying funds to ensure that the allocation enables the fund to capture and adapt to the market condition going forward. Right? So this is all about portfolio management as well as the right portfolio construction, right? And along this journey, AIA Investment Management also produces a few market insights, right, which is relevant and available to you guys to read as a form of updates. Before I move into the two elite funds, let me very quickly share with you our 3 steps portfolio management process, right? In this case, which is designed to deliver the result at the end of the day. First step is really about understanding the goal. Second step, then proceed to construct the portfolio. And last but not least, which is very important in my view, it is about managing the portfolio on an ongoing basis, right? Because like I said, market will never stay static. So let me move into the first step, construct the goal, So basically, it's about understanding what we want to achieve at the end of the day, understanding about the long-term investment assumption. With all this in mind, that is where we can move into step 2, which is about constructing the portfolio with the long-term outcome, something forward-looking, right? Long-term outcome in mind. And like I mentioned, emphasized earlier, step 3, which is very important, is about managing the portfolio along the way to ensure that the portfolio stays relevant. That is where your tactical asset allocation, your strategic asset allocation will come in play. That's where AIA Investment will actually be managing this actively behind the scene on behalf of your client in order to deliver that long-term result to them. All right, next, let us move into your 2 elite funds, your 2 elite portfolio, right? Let me share with you how do we come up with the 2 portfolio, right? The different allocation. Let me flash out everything. Right, pretty simple. As you can see, the conservative on the left of the screen is actually formed by 70% exposure to fixed income, 30% to equities. Your adventurous portfolio on your right is formed by 90% equities exposure, 10% to fixed income. So you may ask, how do we determine this percentage, right? It is really through understanding common client objective, the risk return expectation, right, and any other consideration. That is where we do some form of back testing to ensure that what combination between fixed income and equities can deliver that level of expected returns. Next, let me share a little more about the 2 elite funds with you. Right, like I mentioned, on the left is your conventional, which is your conservative, is the same. And on the right will be your adventurous. As you can see, they are actually constructed using 4 underlying funds, which are sub-managed by the best-in-class institutional managers as mentioned earlier. Right, so those in red tone, the 3 at the top, they are actually your equity funds. So first you have your AIA Global Quality Growth Fund, sub-managed by Baillie Gifford. Next, you have your AIA New Multinational Fund, sub-managed by Wellington Management. And the third equity fund is your AIA Global Multi-Factor Equity Fund, sub-managed by BlackRock. And of course, the one in grey will actually be your fixed income fund, and that's your AIA Diversified Fixed Income Fund, sub-managed by BlackRock. And as I mentioned earlier, this is your core allocation. This is your strategic asset allocation. They are in place to actually deliver the long-term investment returns. And as you are aware, market will never be static, and we should actively manage a portfolio to ensure that the allocation stays relevant. That is where the AIA team will actively manage this allocation on the back end. That's where we may shift the allocation between the different funds in order to utilize the best strategy that can play out in the different market conditions. This is to capture additional short-term returns for your clients. Alright, at this point in time, some of you may be thinking, what exactly are institutional managers, right? So before I move on, maybe I just share some common characteristics of institutional managers so you can see how different they are. So first, at the top of the list, they actually handle monies for the big boys, right? So they handle big amount for your government funds, for your central banks, for your pension, for your insurance company, AIA in this case. So that's where they trade in huge sizes. And that actually brings me to the next point. Because they trade in large sizes, they do have economy of scales, right? That's where they probably can have better preferential in terms of pricing, right? And of course, with them being in the market, the big boys, they do have the depth and the quick sensing of market flow and information in the market. And this vastly can allow them to have the quick information to actually make very informed choices. And very aligned to AIA, right? The fourth box, long-term, they are actually long-term investors like us, which is why we value the relationship working with institutional manager, because they are very aligned to how we see investment should be. That's the reason why they are less reactive to short-term market noises, and that allows them to stay focused on delivering the long-term result. And a lot of times, like I mentioned, these are managers who are very experienced. They have been in the market for many, many years. That's where they know how to, in a way, balance their emotion. They know, in a way, how to read and assess the market, allowing them to make more deliberated choices. And last but not least, being institutional managers, sometimes they do get the first bite. They may have the exclusivity. And a lot of times, these open up a wide range of investment opportunities to the institutional managers as well. And that brings it nicely for me to introduce to you the 3 renowned best-in-class institutional managers that we work with to sub-manage the 2 elite funds. First up, we have Baillie Gifford, one of UK's largest and oldest investment management company founded in 1908. As of December 2020, they are managing in excess of $445 billion on behalf of their clients. And in the elite strategy, they are helping to sub-manage the AIA Global Quality Growth. It's actually a growth strategy looking out for companies within their portfolio. They call it the global champions and local heroes. So by global champions, it's basically companies that are known globally. Things like your Amazon, your Alibaba. Local heroes are basically companies that probably are better known in their domestic market currently, but through their research, they found that these companies have the propensity to actually grow to be global names coming in future. An example could be your Shopify, which is a Canadian e-commerce company that has done very well last year during COVID. And as we all know, Baillie Gifford, as I mentioned, is a very growth style. So they are looking out for winners of tomorrow. That's where through their research, they look out for trends, right, that will actually develop well. And that's precisely the reason why they have invested in such company that actually benefited from COVID last year. Let me give you an example. Like last year, during the lockdown period in Q2, a lot of us couldn't step out of our house, a lot of us couldn't go back office to work. That is where Zoom Video benefited, a holding that they are actually holding in the fund. That's where Zoom Video saw their subscription rate went up multiple folds. That's where people use it for work, people use it for leisure, and some of us also use it to meet our friends, right, given that we can't meet. Another example would be Tesla, one of the top 10 holdings in this fund. And as we are aware, more and more people are more socially and environmentally conscious, right? ESG factor. That's where people are looking out for, low carbon emission. That's where Tesla, being a leader in electric vehicle field, has also benefited from this attention in terms of the car sales, right? As people being more EV focused. Let me move on to the next institutional manager, Wellington Management. Right, this is also another big managers out there. They are advisors to over 2,200 companies, and as of December 2020, they are managing in excess of $1.29 trillion. Under the elite strategy, they are sub-managing the AIA New Multinational Fund, and Wellington, as I mentioned, they are very well known for their deep research, which allows them to know the company very well, and with that, through this strategy, they are only having a portfolio of about 35 to 45 holdings. And these are actually companies which are well capitalized, they are low on debts and leverage, and usually these are very liquid company, very big global company listed in the developed market. Some examples would be your Microsoft, your Starbucks, your Visa, your Merck & Co, as well as the bank in Singapore, DBS. And Wellington Management runs a more mix of value and growth style strategy for this fund. Next, the third institutional manager will be BlackRock. Although they are the newest among the three, but you can see they are founded in 1988. But so far, as of December 2020, their AUM is actually the largest among the three, $8.68 trillion, right, managing on behalf of their clients. And with that, they actually help to sub-manage two strategies on your left, which is the AIA Global Multi-Factor Equity Fund. Basically, this invests through factor investing, right? So that is where the AIA team will actually look out for factors that we think will play out and do well and be persistent in the market condition going forward. Some of the factors are actually listed on your screen: quality, growth, value, momentum, non-dividend, size, minimum volatility. That's where the team will assess the market condition. That's where we will then see which investment factors may play out well or be more persistent to deliver the return expected. That's where we will give the rightful allocation to the factors. And with that, we pass it on to BlackRock, who will then move into the market to execute and buy out companies that represent those factors. Last but not least, we have the fixed income fund, which is the AIA Diversified Fixed Income Fund. A pretty easy fund. It is predominantly an investment-grade bond fund, and they invest in US dollar denominated bonds that are investment grade. Although they may invest slightly into the non-investment grade, but predominantly it has to be investment grade for the fixed income space. Alright, as clearly shown on the previous slide, the different managers comes together bringing across their different experience and different investment style. Over in this slide, I'm going to focus a little on Baillie Gifford, which is the AIA Global Quality Growth Fund that they sub-manage. And we actually got them to share with us what are some of the key trends that they believe will play out well and persist in 2021 and beyond. And these are the three key trends. Firstly, big data. Right? They believe that the huge influx of data right now is going to be king tomorrow. Right? Whichever companies can make full use of all this will actually help themselves to better deliver the objective at the end of the day. It could be through automation, it could be through robotics, and some companies are even looking at using drones to actually deliver things, right? Which is not new, right? Which is something that companies are actually looking into, right? So this is the first trend, big data. And secondly, it's actually about energy transition. right? And it's really about moving away from being very oil focused and oil driven, right? Which is something that has been driving the market, right? Your oil players, your oil rig builders, and all that. But currently, with investors, with people being more socially aware, socially conscious, everyone is looking about transiting to green energy. That's where, like I mentioned earlier, your likes of electric vehicle, your likes of solar, right? And this is the trend that is likely going to play out. That's going to affect the way we actually drive, the way we actually live, and the way we actually engage with the society. And last but not least, the third one, which is great convergence. This is really about innovative healthcare, right? It's about health tech. And you see, with the great amount of data sitting there, today, if any healthcare company were to look at DNA sequencing, in the past, it would have cost them a lot of money. In the past, it would take a long time before they can actually get the DNA sequencing out at the end of the day. But come today, with the huge amount of data on hand, the cost has gone down. The time needed has also gone down tremendously. For example, last year, one company actually managed to do the sequencing for the COVID vaccine in just a matter of 4 days at the beginning of last year. Why was it released in the market? The following months was actually deep into research and testing, right? So this capability is actually going to bring forward how the whole healthcare field is going to be changed in the way they operate, right? And in terms of the cost, of course. And these are the three key trends, right, that believe will actually play out well. And hopefully, with their research and holding the investment for long term, hopefully this Baillie Gifford strategy will continue to add value to the two elite funds. All right, next I'm going to share a little with you about the elite fund performance so far. So as you're aware, the elite funds were launched with AIA Singapore back in July 2019. So what you see on the table here are the performance of the two elite funds, the Adventurous and Conservative, since 2019. If I draw your attention to the right of your screen, you can see the excess return, meaning how much they have outperformed the benchmark since inception. For Adventurous, it's 9.07% annualized, and for Conservative, it's 4.12% annualized, right? Which is a very consistent result that they have produced over the longer term. Similarly, we have also done a form of benchmarking against peers, meaning to say similar strategy out there. So for the Adventurous, which over here they call it aggressive, it's actually the same strategy, right? Over the longer term since inception, you can see they are ranked in the first quartile among peers of similar strategy. First quartile meaning they're in the top 25%. Similarly, for the Conservative fund, likewise since inception, they are also ranked in the first quartile when compared against peers of similar strategy, rightfully showing the consistent performance they have been showing since their launch of July 2019. Alright, over here we are showcasing to you the elite performance for Malaysia, right? So Malaysia, you guys launched the elite funds back in August 2020, and these are the performance of the Adventurous as well as the Conservative fund. So you can see at the top row, the Adventurous fund has been performing decently well given how the market has been, and they have also managed to outperform the benchmark for most of the period. Since inception, outperform by about 1%. And the Conservative one, they have been delivering positive return, but against benchmark, they did have certain rough spot. That is really because the fixed income space hasn't been really easy. Given in recent months, I think there were very big concern about rising bond yield that has actually affected the total return for fixed income. But like I always emphasize, right, it is about the mix of the different allocation for the underlying fund, which is actively managed by AIA on the back end, that is to actually stay consistent, to stay invested, and we are looking out for the long-term consistent return at the end of the day. Alright, and with that, I'm very happy to share with you the benchmarking for the two funds that Malaysia is carrying, the Elite Adventurous and Conservative. So if you look at the last 6 months, the Elite Adventurous is ranked in the first quartile, while the Conservative fund is ranked in the second quartile. Alright, before I end off, I just want to share with you 3 key takeaways. Right, firstly, it's about leveraging AIA Group's last 100 years of experience managing clients' wealth through active portfolio management to deliver the consistent long-term results. And secondly, it's really about channeling institutional managers' capability to retail clients through exclusive investment strategy, in this case, the elite funds, which will not be available outside of AIA. And last but not least, it is really about leaving it to AIA stewardship to take care of building as well as managing your customers' portfolio for the long run. All right, with that, I would like to thank everyone for your kind attention, and I would like to wish everyone a very bountiful and a very successful conversation with your client for your A Life Wealth Premier launch. Thank you.